Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer. Be aware that neither Dimitri, myself, or Market Chameleon are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. As always, these shows are for informational purposes only concerning Market Chameleon tools and products. With that, good Monday morning, D.
Good morning, Will. How are you?
Good.
I am going to share my screen here quickly. And as I'm doing that, a note to anyone joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's keeping an eye on it. He will let me know, read it back to me. And to give you a couple minutes to put those questions in, we're going to take a look at our pre-market report to see what insights we could get in a pre-market trading, and then we will move on to our questions. So pre-market report here, what you will see is this calendar view up top with summary statistics, what's going on in the pre-market hours. This allows you, or the idea is, it allows you to look at today's activity or the most recent activity and compare it to the historical dates and eyeball if there's something unusual. Oops, sorry. If you spot anything unusual or a trend. Let's take a look at today's activity. So this is September 16th, and we see we have 491 stocks trading higher in a pre-market, 357 stocks trading lower. We have 110 million shares trading on up volume, 47 million on down volume. We have $1.2 billion worth of stock trading higher, $2.5 billion worth of stock trading lower. So just eyeballing that, it's a little bit of a mixed bag. We do have more stocks trading higher than we do lower, but the dollar value of the stocks trading on down volume exceeds the dollar value of the stocks trading on up volume. So let's look at it from a couple more perspectives, and then we'll move on to our questions. I'm going to slide down the page a little bit, and now we get this more granular view of what's going on in the pre-market hours. We see stock symbols with price and price changes and volume. We also have our most active list, our biggest percentage gainers, and our biggest percentage decliners. I see 57 stocks made it onto our biggest percentage gainers list, 74 on our largest decliners list, and that points to a more bullish lean in a pre-market trading. Now, to make it onto this list, we set thresholds in place because the trading in the pre-market hours can have very low volume. It could have one share that traded, or very low liquidity, where the markets are very wide and thin. And if it meets our thresholds, it could make it onto this list, which would include small cap stocks, could include ETFs, closed-end funds, preferred stocks. It could be a leveraged ETF or an inverse ETF that moves in opposite direction of the underlying. And to narrow down this group of stocks further, we could use our filters above. And you'll notice there's this in my watch list filter. We include that filter in various reports on Market Chameleon, which allows you to look at the report and filter out that report by the unique stocks that you saved in your own watch list. And if you care about maybe a particular group of stocks that are 10, 20, and you save those and gave that watch list a name, you could filter out that report by your watch list. I'm going to use this filter in ETF in our example, which is a similar concept. But instead of saving your watch list, you could reference holdings in an ETF. And let's see how that works. I'm going to click on it. And now we have these different ETFs to select from. I'm going to select SPY, which is the first ETF on that list. And you could see once I selected it, the list below got filtered by stocks that are holdings in the SPY ETF, which is similar to if you saved a watch list with S&P 500 companies and you filtered it out. And what we did was narrow down the group of stocks that we're analyzing or researching to the S&P 500 companies. Here we see 3 stocks made it onto our biggest percentage gainers list, 14 on our decliners. So that indicates a more of a bearish bias or lean in pre-market trading activity. And we gave it a couple minutes, so I'll take some questions now if you have them.
Yeah, we did have a question pop up from Santa, and thanks for the question.
Yep.
He's asking, is there a way to see the charts options contracts with the volume in the platform? I'm assuming he's meaning the volume of the options.
The volume of like the total options or like a particular option?
I think he's asking, well, Santa's on, so Santa, you can answer. Is it a particular option strike, or is it the entire options volume? We can wait to get back. I don't know if you can show variant, maybe. Before you get started, could I share the really quick? Just share the disclaimer one more time so everyone can take a look at that.
Okay.
Did you see it, Sharon?
Yep.
All right, perfect. You can take it over. Thanks, Steve.
Okay, thanks. So let me share my screen. And so we had an interesting question from a user. Can you see a volume chart of options throughout the day? And so I navigated to a particular stock. I just used Tesla here, popular stock for options traders. And when you come to this summary page, the first thing you'll see, I'm going to close this menu to the left to expand the screen. The first thing you see is 2 charts side by side. One of the charts to the left hand shows what the stock did, the underlying stock, Tesla, and a volume chart, but it's a bar chart that shows 5-minute intervals. Okay, so that's what you're seeing here to the left-hand side. This blue bar is showing you where the stock price is, and throughout the day how it changed. And then you get these yellow volume bars that show you the volume for that particular 5 minutes. And the idea there is to see if there's any particular period throughout the day that sticks out. If you get this big spike in volume in a particular 5 minutes, and then you could look at what happened to the stock around that time. So in this scenario that I'm looking at, nothing unusual pops out. We see a lot of volume in the early morning, then that volume seems to taper off, kind of remains steady throughout the day, and then increases right up to the end of the day, which is, if you look at this from day to day, is a typical volume profile. Lots of trading early in the morning, and that's people placing orders based on the news cycle that's coming from overnight or in the early morning. Afternoon, it drops off, and then at the end of the day, you have another increase in volume. That's because you have rebalancing of positions, taking off risk, hedging risk, doing things that usually you have towards the end of the day. So in this scenario, this stock just looks like nothing unusual, and you could see that it kind of just traded around this red dotted bar, which is where the stock closed previous day. And now we have the options. So now over here to the right-hand side, we have the a graph of the options trading and activity side by side with the stock. And those bars that you see here are option volume bars. That's the option volume that traded for that particular 5-minute period that corresponds to the 5-minute period in the stock. So you could see here that the bars also have a yellow bar and a blue bar. And the reason behind that is with options volume, you have call option contracts and put option contracts. So this bar, it's stacked with the call option volume in the yellow, the blue option volume representing the put volume. And the bar, it's stacked, so you see the total volume in the contracts, but you could eyeball and kind of get an idea of if the most of the volume's coming from the calls, the puts, or distributed equally. And here we kind of see a similar situation where the volume looks in the options looks very close to how the volume looked like in the stock, where we have a larger trading volume in the very early period of the day. As the day progressed and went into the afternoon period, the volume dropped off. Nothing unusual appears to have happened in between. We don't see like a large spike in the afternoon anywhere. And then maybe, towards the end of the day, maybe came up a little bit or stayed the same. Now, besides the volume here, right? So now we have this, the volume, and you could see on the left-hand side, we have two things that visually, right, helps us detect what may have happened in the trade. So one is the volume, and the other is, well, how did the stock price react to the trading? Because now potentially you have a lot of volume, but the next question is, well, how did that impact the stock price? Like, was there a lot of volume and the stock price just remained the same? Was there a lot of volume, but the impact on the stock price was that it pushed the price higher, or could it push the price lower, right? So that's another detail or important information to know, what was the impact on the stock. With options, it's a little bit also difficult to say what the impact was on the options, because options themselves, you have different options in there. Like this here in the yellow bar, blue bar, it's a cumulative volume in calls and puts, but these calls and puts could have been distributed across different expirations or different strikes, or could have been all in one strike and one expiration. So this is kind of an aggregated, summarized version of the volume in that 5 minutes. Okay. And because you have so many different options in there, so that's some of them, the impact could have been one way, some the other way. It's hard to represent that in a graph because you could have had 100 different options that traded in that 5 minutes. Some could have been at the money, some could have been out of the money, so forth. So we can't really, draw a graph that could easily represent, the impact on all those options just in one graph. But in the industry, there's kind of a benchmark that was standard to track of what may be going on in the options in general. Okay, that doesn't mean it reflects every option, but if we had to reference a benchmark in this situation, we looked at the most, referenced benchmark, which is the 30-day constant maturity at the money option. The idea there is, well, what happened in that 30-day constant maturity was because if something perhaps significant is trading, or it could push the implied volatility higher or lower in that particular option. So this here line, you see it says IV30. This green line is tracking the implied volatility of a 30-day constant maturity option. Now, keep in mind that a 30-day constant maturity at the money option doesn't actually exist, because you would have to continuously create a new option that's 30 days to maturity and at the money, right? You'd have to constantly create that, and that doesn't happen. The exchanges, they just list options, and then those options exist until they expire. So to create that benchmark, we would have to come up with a derived value or a way to track it. Okay, so and that's what the benchmark is. It's like this derived value from referencing referencing other prices. And that's so the 30-day constant maturity here, it's a methodology that we created, over the years, where it takes into account different things that we've noticed to account for, like such as wide markets, holidays, days left, trading days left to expiration. And so this is a methodology we created, okay, that is similar to other methodologies in the industry, but we've accounted for other things through our experiences, like cross markets and stuff that we had to account for. Now, and then we use that same methodology to track this. Okay, so that's also important to note, that this isn't, when we talk about an implied volatility in a stock, well, there's no such thing as like this trading implied volatility that we could reference. It's a derived value based on a methodology, and other people's methodology could be different, right? You could just plug in Black-Scholes with just assumptions and not account for anything. But it will also depend on, well, what options are you referencing, what weightings do you give, and so forth. Now, this is kind of a quick view, an eyeball view of, the volume and the impact that the volume is having on the stock price, and the quick view of the options volume, the difference between the calls and the puts. Here we have like a total, like you could see here, 62% of all the volume was in the calls, 38% in the puts, which you could kind of also just tell by eyeballing. You see more yellow than blue on that graph. And then the impact on that 30-day implied volatility benchmark. Okay, and that's a starting point to give a quick overview of what might be happening, or if there's something unusual. If we saw maybe a big spike in the implied volatility, well, maybe then something happened, it stayed up there, maybe something happened, or a big drop in implied volatility, and was that, also correlated to a big spike in volume? Did it correlate to a big change in the stock price or volume. So this kind of shows us a more broad, view of that trading activity.
AD,
Right? Yeah,
we did get Santa got back to us, and so it was the options volume of a particular contract. He was wondering
sure.
how you chart it. I don't know if you can
Yeah,
move.
yeah. Okay, so then we could go, let's open Tesla. I'm going to go into the options. And to go to a particular option, we could go to the options chain, right? So now we're going to the options chain. And here we see that there are different expirations, right, in the options chain. So those are listed here. And if you click on a particular expiration, let's say September 20th expiration, what this options chain will do is bring up the available contracts. These are the strikes. The calls are to the left, the puts are to the right. And you get these different volumes, in the contracts. So this is basically by contract. And you could just select it from here. Let me just maybe go to one, I don't know. Let's see one that doesn't have too much. Like this one had 384 contracts that traded. So when I clicked on that put, here are the details of each trade. So here you got a time in sales, and it shows you exactly, the details of the trades that were reported on the Oprah with the number, the quantity of the contracts, the price, and so forth. In addition, we could look at let me see the IV graphs. Let me see where. So here we could also look. I think this is actually not on the day. He was looking on the day.
Santa, if you could answer that, are you looking for the day or the week or the month, or what were you looking at? I'm assuming it was the day, but I'm not 100% sure.
Right. This is the implied volatility of the option. Let me just see. I believe we do have the chart. Let me just make sure I'm not missing it. You know what? Hold on a sec. Click on this. If you click on the option itself, right? The 237, you see the 237 put, I clicked on it, 1030, 1040. What we could do is run an analysis on that particular put. So I'm going to click on run analysis. And you get all these different stats on that option. So I believe that if we go to the historical charts, okay, so I'm going to go to the historical charts on this option. What we'll see is first the option price, the implied volatility, and what the stock price did. And what we're curious is to see the volume in that option. Okay, so here what it will do is if we click on this single leg trades, right, because we only looked at the volume itself, and if we click on it, what this will do is now add the volume bars again for those 5 minutes, the volume bars that traded in that option. So here we could see, let me see if I could remove some of this. So here you could see those gray bars that I'm hovering over. That's showing you the volume in that option for that particular 5-minute period. Okay, and I have selected over here September 13th, so you could change those dates. But that gives you a volume bar throughout the day. Okay, so that's not a cumulative volume, that is based on that 5-minute interval. Does that help answer that question, Will?
Yeah, it's perfect.
We could also do it down here with if we wanted to compare it to the implied volatility. So you could see here, those are the volume bars. This up top shows you how the price of the option changed. Up top, it shows you how the implied volatility throughout the day changed and what the volume traded is throughout the day in those 5-minute bars. So we're right up at the end. I think I will.
Yeah, that was very helpful, D. That was exactly what he was looking for. Thank you very
Yep.
much. As
Yep.
always, everyone have a great start to the trading week. Thanks again, D.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.